So we'll set up our depreciation on the 1st of July 2019 and assume that we've got a written down value for that date. So let's head over to Tools and we'll add in low value pool, and that will be a rental property low value pool in this example. So that will be 1st of the 7th 2019, and let's just say that that pool had an opening balance of, I don't know, 4,500, right? So we need to add in an asset now. Various, we'll just say various, because really what we'd be doing is we'd be adding in all the little assets that were there, but I don't know how much value there is in that if you've already got your records for all of those assets, and they would be sitting in there from the 1st of the 7th 20. Who knows when they were in there from, and maybe the whole lot of them cost $6,000. The reason that you'd put in assets into a pool is not because the assets have anything to do with the computation of the depreciation, because the pool value prior to that date is what drives the depreciation on the pool. The reason you'd put in assets is so that when it comes time to sell the assets, then you would be able to handle the disposal of those assets. Okay, so it wants the accumulated depreciation. We shouldn't have to worry about an accumulated depreciation for a pool, right? So we've put in that opening balance, and we've put in the assets. As I said, in this case we just said various, and what you'll notice is that cost has got absolutely nothing to do with the pool as such. So let's add another asset, another low value asset for let's just say that we got an old barbecue for the property during the year. So 1st of the 1st 2020, right? And maybe that barbecue was low value, somewhere around, let's just say that it was around $300. So we've added our low value asset, and now what we can do is we can run the pool. But before we run the pool, let's head over and make sure that we've got this. I guess we really need to set up this pool. We've set it to rental properties, low value pool, right? So let's just head over to forms, add a form, individual tax return, and we're going to create 2020. Okay, so have we got any rentals in there? No, but we're going to add a rental. So complete. You didn't see me press the complete button, but it was there. Okay, and rentals. So we're going to add in a rental. Okay, so we'll just use that one as a dummy. And we need to come in here and add in our capital allowances and add. Now that's where we wouldn't see, or we can see the pool, right? So that's our low value pool added in there. So 1748, and if we went back, we would see that we've got our rental and reports. We could have a look at that report. So what have we got? Here we have our low value pool. Okay, there is the depreciation. There's the asset added. There's the opening balance, right? There's the new asset added during the year, which is the barbecue. and here's the depreciation on the opening balance, and there's the depreciation on the asset added. So we get our closing balance there, and you've got your drill through, so you can go back to these assets if you want, okay, to either dispose of them, or if you had to make changes, you'd have to come in here and make changes. If you have to change the value of if you have to change the opening value of the pool, you can see it's all grayed out. What you'd have to do is remove your assets first. So it's absolutely critical that you get your opening dates right, both there. So when I say there, when you come and run a setup, when you come and set up an asset, just make sure that you're getting everything right in the first instance, and also back over here, depreciation. It's got to have the right opening date. Now, if there's any other types of assets, you do have to run the depreciation module. So what do we mean by that? You'll see that depreciation value was injected straight away, but to get your depreciation to post, really, your optimal approach is to come 30 June and post. Okay, and then that, when you go to your reports, let's just head over to the report, and you can see our estimated value, which is what we just saw, is now the same as our actual value, right?